Hey guys, yep, gold and silver I'm going to talk about today, the precious metals. So with iGold Advisor chat I had some 9 months ago, I've got about 2,100 views, not very much. It may represent the enthusiasm for gold and silver at the moment. That was 9 months ago. I was warning that it doesn't look good for gold and silver from our side. I did a precious metals update 6 months ago. In fact, that line, and you can see the grind line I've drawn there, and I was explaining that I expect that to be broken to the downside for gold. I expect that to be broken to the downside for gold. That was some 6 months ago, around the same amount of views. Then as we came up more recently, 4 months ago, sorry Messrs. Maloney and Shift, I wrote, the dollar will go up and precious metals will go down. That was some 4 months ago, reiterating that it's going to be a sell-off. Here was the dollar again, precious metals down, which has led to the dollar strength that we've had for a sustained period now, although it's had a rest. But it came from a long way away, and during that period all the time calling bear on the precious metals. Here was the point roughly when the grind line broke to the downside for gold on precious metals. In short, the opportunity to buy more precious metals lower down was presenting itself. I'm all good with buying insurance and the role precious metals plays in getting insurance against the system malaise that we have. I am not a gold hater. I am a supporter of gold. However, it matters. Entries matter, guys. Entries matter, and gold has just been a huge disappointment. So let's take a look at those charts. Let's start with gold. Here is that break that you saw happening. This structure was never particularly good. It was what we call grinding. You'll learn about grind lines if you were to do a program. We've got our webinar on September the 4th, not far away now, for It's Not What You Make, It's What You Keep, and the 5 M's to becoming a successful trader. So keep an eye out for that. But that grind was broken. You can see the little twitchy bit of price behavior as it ran there, trying to hold the level, return move, and big rejection candle on that one. Let me pull it in a little bit more, trying to keep the bull market of the just before in frame as well. But that was a big return move and then smack down the other way. Major rejection candle. These were up at 13, just sub the 1320 levels, 1309, and now you're trading at 1200. 1200. That means more gold for your money. In fairness, this 1160, there was a reasonable rejection, a little bit of follow through, but still not that powerful follow through the following day, week, my apologies. So that was a terrible week. You did take back 50%. There was a little bit of a bump, but this has been a very low vol, consistent, steady sell-off. It's not yet in capitulation state. So whilst there was some rejection there that might give some encouragement, I don't feel positively disinclined to gold yet, and I think it can be had at these levels again, and there is a possibility that this resumes for a while. So it's unlikely that you can safely call this as a bottom. When we look at silver, the case is made even more strongly. I mean, I've done a bit of previous TA over here on silver, and folks can join in with me. That was a key level, roughly the 28/26, whether you can draw it anywhere in that zone. And when we let go of that level, it was saying bear market. Many were hoping that this was just a high volatility setup for another move up, but this was in fact a descending triangle, like that. And you were tapping on the floor. All the volume by price, if you throw it on there, would have been tapping on this floor here of the $26 level. And since then you've been in a bear market, and you should have traded to the bear side. We had a big sell-off there. You set up inverted structure. You had another wind up and sold off, and then you didn't make the target. And you started, and everyone said, "Yay, bull market is back in town." It never invalidated this inverted, although it timed out some time ago. drifted off back and started squeezing again. While gold was breaking that grind line that we just looked at, silver was breaking this downside. Now, as you saw, this didn't make target, but the price behavior respected the pattern and sold off immensely. So at that high, you're at $21 and it came down to 13, a couple of dollars away from the eventual target, which was not much more, 12.3. So it came very close to making that target, and may still now, because it had never invalidated its stop run despite this rally. So there was a bit of a zig and a zag, a bit of QE, who knows, gave a bit of heat back into the precious metals, but nothing that was sustainable. We squeezed within the funnel. Again, you could have shorted there, and you could even put your stop just at the top of that wick. So another downside target with inverted hunt volatility funnels have been set up. This one is in single digits. Once again, as you saw, this one didn't make target, or hasn't yet. So it's not to say that the $9 will. When you have a number of targets that haven't been made, outstanding or timing out, in other words, the time we typically allow for them to do it has actually run out on this particular one, even though the level still could be run. We also couldn't invalidate it. So we're in this sort of in-betweener land where downside patterns have not yet performed, have taken a bit long, but we haven't got enough bullishness to invalidate them either. So this is this lull, this important part where when you go from bull to bear and violently, and then you don't just revert straight back to bull. It's this bottoming churn that kills traders who keep trying to trade for the new move and keep getting false dawns. That would have been a false dawn bull. That would have been a false dawn bull. That would have been a false dawn bull. This entire move was another false dawn bull. Eventually it just breaks people's backs. It takes them out of the game. This is very low volatility spill, with only just a slight acceleration in the end there in the same day week as the gold market. But where gold then traded up, silver isn't. So let's just get this in screen, because that's a bit too small for everybody to see. That is an ugly candle right there that week. You tried to base up, and then what happened? You traded up and you got rejected. I would say it's extremely likely that you will once again be running that low and further downside, and there is a good chance the original inverted over here to my left will have its target made. That's right, the overall inverted from that started way back with the spill in 2013 is more likely than not to have its target made. I mean, that's an unbelievable set of circumstances. Yes, it's taken a while, but and it may well come, but wow, what a thing to have happened. When is this recovery coming for the precious metals? As I point out, the metal sellers, Maloney and Ship, are out there and they're saying buy, buy, keep buying. But every time they've said buy, you could have bought for more, for less later if you were using timing or HVF method, which is why it's beneficial to have a sense of timing. Accumulate the cash, accumulated in dollars, even for now, as much as we hate the concept of the Ponzi fiat scheme, and get the timing right, accumulate it up. Imagine you can buy your silver $9 when you were paying $24 from one of these guys that were selling them to you for 24. Imagine buying it for $9. You know, almost 35, going on 37.5% of what you would have paid in 2013 if you'd only accumulated the cash. So, you know, you've got to get your timing right for your precious metals, and this is looking like more downside for silver. The silver looks worse than the gold, and that is bad. And then you get the manipulation that always comes out. It'll show up in the comments, first or second and third story. The whole point and the thing that no one's ever yet been able to explain to me on the manipulation narrative. Let's say, and I'm there for a conspiracy theory if it can be justified. I know the control structure doesn't work for you and I. It works to serve their own needs. But if these people are just paper selling all these damn contracts short, short, short. Why is there never a short squeeze? Why don't the real users of silver stockpile and buy so much? Why don't the mines restrict supply if they're not being paid a fair rate? Remember, there's not many dedicated silver mines. It's a byproduct. So those mines are either all in on it as well and happy to be paid low prices for their product that they're digging out the ground. What business runs like that? If you are of the view that your silver is not being paid in an adequate price and you're a copper miner and you're getting out silver, stockpile the damn stuff until someone offers you decent money. You're making your money on copper. If your shareholders are demanding that you don't take a view and are not prepared to give you that and force you to be sellers, okay. But we're told solar panels, iPads, all the smartphones, all using silver. If these guys are short selling it to such a commercially low price so that everybody can be levered into having their prisoner tags that they carry around with them staring into, mesmerized, how come we never run out of supply of silver? I've been told before that there used to be 8 billion tons above the ground. Then it's come down and it's coming down, and we should be just about, few 100 million or left. But why would people run inventory down to zero on a product that is deeply required? I use colloidal silver every day. Silver is used in TVs, everything, every day. If the price is wrong, how come people are still supplying it? If people are shorting and conjuring up an unbelievable amount of contracts to suppress the price, why is there still continual supply? At some point, you should have a real production squeeze if it's non-economic to bring up to the ground, if people keep shorting the daylights out of it. This conspiracy theory is one of those that don't make sense to me. Mines are there for economic profit. They should be wanting to sell for the highest price, especially if you're a dedicated silver miner and you're the owner of that silver miner. Just take it private, get rid of your shareholders and stack every bar you bring and wait until someone's prepared to pay you a proper price. I can't get it. I don't get it how I can understand short squeezing in a short time frame where a bunch of people take a charge for a while, but eventually the equalizing nature of market demand and supply takes full place. Silver is being utilized in equipment. Yes, some of it gets recycled, but lots of it is lost. Silver is being utilized and is required on a growing level. There must be sufficient supply at this price. If there's sufficient supply, then the market must be closer to its supply and demand fundamentals. I don't understand how people could just short products they don't ever have and never face a squeeze. At some point you got to deliver. That means you have to buy it physically. It's clearly plentifully available at a cheap price, because otherwise they'd be short squeezed. Anyway, that's my rant on the whole manipulation story. It's supply and demand dynamics. If somebody's got a reason or flaw in my logic, then I'm happy to hear it. Let's talk about the silver and gold ratio. This needs to be going down for precious metals to be going up, guys. It's not looked like it's been going down for me for ages. In fact, we have what I call an upside orientated ascending HVF structure that could see all-time highs in the silver gold ratio. That means silver price will be falling even further relative to gold. Silver price would be falling even further relative to gold. Hey, yes, I'll even buy some myself, low down, but I ain't going to buy it now. I'll let it get cheaper. Maybe there is something to these stories. Maybe I'm missing something. But I can't just go on and short billions of everything. I'd crash Bitcoin and pick it all up for cents in the pound. All I need is a cartel of people just to short it. But somebody eventually asks for the Bitcoin and you have to be able to deliver it. That means you've got to buy it. And you have to buy the same amount that you shorted. That is called a short squeeze. So here's what's happening of major ascending. I don't say ascendings make their target. That's not to say I'm calling 138 silver gold ratio. In other words, 138 ounces. No, I'm not saying that. These often fail because there's too much squeezing along the bottom. But even if we get a pop here just to this level before we fizzle, and then maybe big bull season as this ratio collapses, this right now, what it's doing right now, and this is a weekly and monthly chart. This is a monthly chart. This month of the gold-silver ratio, I can tell you, is about to tripwire an upside breakout with the takeout of that high, which will probably see it at least run that high and that high. That means you're going to probably trade into the 90s on the silver-gold ratio. That doesn't mean my target has to be made on an ascending. It could even moon through it. It does sometimes happen, but it doesn't. It's my belief system, and you should trade the markets that you see, not your belief system is saying, no, I can't do that. But who knows? At oil, when we shorted it at $104, we didn't think it would trade through the $60. It traded 25. So who knows? Who actually really knows? Trade what you see, not what you believe. I don't believe that we're going to see hundreds plus over here, but you should be prepared to consider it because it could well happen. But we're certainly heading for the upper 80s and potentially into the 90s. Look, this could turn around tomorrow, fall through that red line and fail. The minute that fails, that's the beginning and the end of this upside squeeze. It could do it immediately. But right now, with the momentum it has, it doesn't look that way. That means you will buy Peter Schiff and Mike Maloney's gold and silver selling products for less. You will buy it for less later. Postpone consumption. It's not a consumption, it's an investment. Postpone your investment for better yields. Hoard the cash first. Let's see what happens this October, November period. I wonder, I have a feeling that there's something brewing. So that's your gold-silver ratio. That is gold. Apart from a little bit of a bounce after a little bit of an acceleration, it was in a very steady channel downside selling. Very steady. These low volatility, steady channels can bleed out for ages. It's when they start to get highly capitulative that you're sometimes near the end. That one candle was a little bit of an acceleration. You got put back in the channel. I'm not ready to call the bottom on that. And gold is looking better than silver, which looks like the great unloved, the stepsisters left behind from the ball. And wow, what would it be? A single digit. This would be one of the biggest single ramp ups and then subsequent dumps. You've got to remember this literally traded $50, literally, not quite. Traded $50 from the lows, but not that long ago. In 01, it was 4s, 5s, 7s. Over here, straight after the subprime crisis, it would be 8s. We would be returning to, if we traded 9s, the low of the post 2008 crash before the quantitative easing all began. Wow, how about that? So that's my take, guys. That's not a good time for gold or silver. So with that, I just want to say I think it's a good investment for the failure against the system. It's just not right now. If you're monthly, sure, nibble a little bit on the way down, all the way down, average cost down. If you're going to put any form of a chunk, the likelihood is if you put it in cash, you'll be able to get more later. That is the summary of this. With that, I love you and leave you. Remember the webinar on September the 4th. Also, many people are finishing August, the holiday seasons, and thinking, what are we going to do about our wealth building? You need the 5 M's. And you can find out about it on the webinar, and more importantly, you can become part of a community and work towards doing exactly that to save yourself from the great reset, for which gold and silver may still play a key role, but you've got to get your timing right so that you maximize. Speak to you all then.